Wow, good turnout. I'm very impressed after last night's events. Thank you very much for turning up. My name's Karl-Magnus Wadsack, as it says up there, a bit of a mouthful, known as Mags for short, and I'm the Strategic Growth Director for Open Banking at Equifax UK, which means my day-to-day role is working with Equifax clients and prospects with the aim of adopting the use of open banking and transaction data predominantly to augment their credit risk and affordability decisioning, but we also have other sexy use cases such as ID, market intelligence profiling, spend analytics, etc. So come and speak to the Equifax stand if any of that resonates with you. This talk is about the future of bureau data, is it? Something like that. Obviously, we've kind of bent that to open banking, so bear with us on that. The inevitability of the credit information market study will be that there'll be a level playing field across all the different credit bureau of data being shared by lenders. So it's never been more important, really, that we understand the differentiated data sources that are available to us as lenders and not, in order to make better decisions from understanding our customers better using things like transaction data that's obtained via open banking to get a deeper understanding of customers and able to deliver better customer outcomes and affordable credit. We have a rockstar panel of fintech lenders, hot off the press, award-winning fintech lenders, and they all share the common love of delivering the best consumer outcomes as possible. And to that end, all of these lenders here on the panel have adopted open banking to help have a deeper understanding of their customers in order to meet that goal of facilitating better outcomes and being able to deliver affordable credit to individuals that wouldn't normally have access to it. So what better topic to get your juices flowing? That's the thing. There's no fireside, so it's not a fireside chat. But what I want to really emphasize is that this is a panel with rockstar panelists. So you must have some compelling questions. Now's your chance. The Slido app that Amy mentioned, please go on there, put any questions on. We'll obviously do an introduction, and then any of those compelling questions that come up, we'll make sure that we put it to the experts and you get the answers that you need. So, to the panelists, starting to my direct left is Tamsin Powell, Chief Risk Officer at Credit Spring. They support low-cost affordable loans that fit every individual by offering a single membership plan which grants access to no-interest loans in exchange for a monthly membership fee. Tamsin has been in the industry for a long time, over 25 years. Doesn't look like it, does it? And she's been in a variety of risk and operational roles and was recently included in the Credit 500. And as I mentioned, Credit Spring picked up an award last night. So congratulations, Tamsin. Jamie to his friends. CTO and co-founder of ethical consumer lender Plend, another award winner from last night. James leads the risk, data and development teams to build new products and evolve existing offerings at Plend. And with 10 years of experience building digital products, James has an impressive track record, this is his writing, of launching successful apps, platforms and websites for publishing houses and government think tanks. But like everyone here, he has always been passionate about building products which drive social impact. Last but not least, Chief Risk Officer at Finturn, Abound Render. What would you like me to say? Finturn?
All of the above.
All of the above. Mark oversees credit risk, data science, and affordability and underwriting processes, and other risk topics. He's a proper data nerd who loves all that kind of stuff. Coming from a background at EY, he shared a vision with the other founders that wanted to ensure that people who essentially had thin credit files and were invisible to traditional lending sources were able to obtain affordable credit. Mark returns to the Principality 2 weeks after completing the National Three Peaks Challenge, where he went up and down Snowdon as the last bit, so congratulations. And that was all in the aid of Spread a Smile charity. Kudos to you, sir.
Thank you.
Right, so whilst we wait for you to start putting some exciting questions up on Slido, I think the first thing we would like to do is have the panelists introduce themselves, how they're connected to using this differentiated data source of transaction data to deliver better outcomes for their customers. So if we can start with you, Tamsin.
Yeah, thank you, Mags. So at Credit Spring, we're very passionate about helping people who might otherwise be excluded from mainstream credit. And that means that people that we can't help, we're very worried about where they're going with the reduction in the market of high-cost short-term, which we support, but at the same time, we're worried about people who are unable to help because illegal money lending is possibly the next step for them. So we look for any opportunity to be able to help customers that we can in a sensible, responsible lending way. And we've integrated open banking into our processes to allow us to accept up to 2,000 extra members, as we call our customers, every month, which is really pleasing for us. So we really feel that using both together in conjunction, the Bureau and the open banking, can really help us get a much better picture of our customers and make those right lending decisions to enable us to help more people who need access to our product.
Thank you, Tamsin. Jamie?
Yeah, so Plen's a B Corp lender, and we've built our own open banking engine from the ground up, so our own taxonomy, categorization engine, risk factors, all these things that give us insights into how our customers earn and spend their money. What do we do with that engine? Well, we use it to power our own loans, and we try to make sure that those loans are more affordable, larger, longer term than what our customers can usually get on the market. And we also use it to power loans with our partners. So there are credit unions and CDFIs who we give the engine to free of charge because we believe in what they're doing. There are partners we have who have products like green energy loans, who maybe they can't find a traditional partner who can score their customers to give those customers a chance at credit. And we also partner with the government program sometimes to do low-cost lending to people who are usually declined for credit completely across the market. So there's a lot of different use cases that we use the engine for, but the aim is always getting a customer a more affordable loan, a larger loan than otherwise they'd be able to get on the market.
Brilliant, Jamie. Thank you very much. Mark?
Cool. So a few more things about FinTurn. So we launched FinTurn in March 2021 with the mission to prove that you can really expand access to affordable credit and manage risk better by embracing open banking data as well as credit bureau data. We were motivated by our management consulting experience that the founders had before that and trying to convince banks to take this kind of step, long before, which proved difficult. So we decided to go do it ourselves. 3 years later, we think our track record shows that, we're proving that case effectively. So to give you a few stats, in our core product where we're lending between 15% and 30% APR to near-prime customers, well, we're kind of experiencing, for each 12 defaults that you'd expect to get from a credit file perspective, according to the credit score, you should see 12 defaults. We actually see 3 or 4. And that's consistent performance over 3 years. We're originating about 30 million a month, so we're proving that this works at scale. And we're now, with additional products and additional funding line, expanding the range of people that we can serve and expanding the range of APRs, so from high single-digit APRs all the way up to mid-40s. We're already profitable, and like Jamie, we have a kind of, and to sort of answer the question that Mags put earlier, is Abound is the direct-to-consumer lender. FinTurn's the overall company. Render is the technology that Abound uses to make those decisions. We're now making that Render technology available to 10 other lenders as part of our mission to expand access to affordable credit, not just through Abound, but also through other lenders.
That's great. I mean, some great stats there, Mark. Before we get into the questions, you said about the lower default rate based on what you'd expect for the credit band that these customers are in. What do you think drives that lower default rate predominantly?
It's a lot of different things. There's a few basic things that you have in open banking data that you don't have with Bureau. The fact that it's real time, the fact that you can easily sort of corroborate what's in the credit file, you can check that you've got a complete picture, you can rule out some really obvious things like did the customer lose their job. So there's a whole bunch of sort of hygiene factors and information completeness factors that probably gets you to 60-70% of that reduction. And then the remainder is fancy data science that kind of tops that up, because you can, as well as obviously being able to do affordability better, you can do credit risk significantly better as well. Yeah,
and I mean, I also see, I think that particularly as the ticket price increases and you go more prime within the market, that connecting to open banking in itself is a barrier to people who are bad actors, and that's going to obviously benefit you greatly because there are people who are looking for affordable credit, but they also know that connecting their bank account is a barrier to fraudulent behaviour.
I think that attitudes are changing in that regard, and our experience is certainly in the near prime, customers are very willing to share their data, as long as it's very clear what they're going to get in return for it. I think in the prime end, there's still a little bit of a residual, well, I'm a prime customer, why should I have to? But I think that's changing slowly as well.
Okay, I mean, it sounds compelling, right? I mean, why aren't you using open banking? It seems to do everything we need. That's obviously not the truth. But it's fair to say the majority of lending decisions for the majority of lenders are still done predominantly via traditional bureau data sources. So with this in mind, does open banking still have a long way to go before it becomes a mainstream source of credit risk and affordability decisioning? Like Tamsin, I'm going to come back to you on that.
Yes, I think, as I said, at Credit Spring, we started using open banking really to verify income, to perhaps, for security, for people being able to log into open banking. We then developed the scorecard, and we do use it now to approve people who otherwise we couldn't. But we still believe in the value of both. Really, because 65% of the people who we ask to go through the journey do, but there's still those who are reluctant. And I think there's still a lot we can do in the industry in terms of, advising people that it's safe and advising people the benefits of using it. There's information that we get from the bureau that we can't get from open banking, insolvency. Commitments, how long the commitments last for, things you wouldn't see through open banking, whereas with open banking we obviously get, characteristics we wouldn't be able to get. We can identify people who've got gambling issues that perhaps, it's not sensible to lend to them, and then be able to signpost those to people to appropriate places to get help. So, I think in terms of it being used alone, I think there's a long way to go. Some of the main issues we have are still around the number of bank accounts. If you're like me and you're a dinosaur, I've still got my one bank account that I had when I first worked for Barclays over 25 years ago. But these days people have multiple accounts. They're encouraged to switch, and we still struggle with that primary account. Only 30% of our customers who go through the open banking journey actually give us that primary account, and then we're left sort of asking for more or trying to piece together information from different accounts, which can be quite complex. So still lots of challenges within using it, but massive potential for it to really change how people can access credit and to lend more responsibly. At the end of the day, there's only so much you can get from the bureau data in terms of actual current real life affordability for a customer. So massive potential, still some challenges.
I mean, Mark, there's a perception here that some of the adoption issues are down to the friction in the onboarding journey for customers having to consent. Is that something that's realistically something that's a barrier from the point of view of you building a business that mandates open banking as part of the lending process?
Yeah, it's 100% of our abound lending requires open banking. I don't think it has to be. There has to be a lot of friction, and in fact, if you are taking open banking data, it means you have to ask fewer questions about income and expenditure, because you can obviously figure it out for yourself. So I think it's something like 15% of our customers drop off because at the open banking request stage, and that includes people who know they have maybe something to hide. So not all of that's kind of bad drop off. But I guess, like the other panelists, we do embrace bureau as well. We actually just went multi-bureau. So we believe in the sort of the power of both. There's obviously, there's kind of a balance sheet view that you get from the credit file, and you get the sort of more of a cash flow P&L view from the open banking. They complement each other well. But no, our experience is that as long as customers are clear on the value proposition, i.e., I'm going to get a better rate, it's a very smooth journey. I just click a couple of buttons. I don't have to fill in any forms. It's a very painless journey. I think where there's a residual concern, it's probably a little bit sort of either they're hiding something or there's some sort of principles issue with why should I share. But I think, as I say, that's kind of getting better.
I mean, do you have any stats, Mark, around the typical drop-off rate as a result of asking someone from open banking?
It's about 15% on our near prime product, but it's higher on the prime product at the moment. It's like 30-40% on the prime product. To the point around open banking, sort of multiple accounts and so on, we are very strict in our abound journey to make sure that we've got a complete picture of of income and expenditure. Sometimes customers only put an account with one big transfer in and one big transfer out. That's not good enough. There are lots of ways you can catch that, and we think we've made a nice journey to automatically go back, email the customer, and ask them to link the extra accounts. Our experience is that customers generally are okay with that, so that's working. That's working quite well. Yeah.
Okay, Jamie, I mean, do you want to expand on that? I mean, for example, we know that there are lenders out there that use open banking data only, and both Tamsin and Mark have highlighted the fact that there is stuff that's not in transaction data that is pretty fundamental to understanding, whether customers have particular credit commitments that, unless they're using them, revolving credit, you won't see any evidence of that on the transaction data.
Yeah, for sure. And we really admire those lenders who do just use open banking. That it's very bold. I think most of those lenders don't offer, say, the kind of products that Plend and Abound do, which are sort of those up to £10,000 or larger, and those lower rates, because I think you really need to know exactly who you're lending to if you want to offer a product that large. And when we're talking about access to ethical credit, it's not just about the rate; it is about the size of the loan that you're able to give. So I would say that. Those lenders who are just using open banking data, they aren't able to offer the same kind of access to larger credit, which is that kind of transformational credit, which I think the combination allows Plend to do. I think in terms of that wider adoption, I think there's a couple of things that have changed recently in the market, which are really important for open banking. So one is that most borrowers now come through the price comparison websites, so your money supermarkets, compare the market, all these places. That's where people go to look for a loan product. They want to see the best prices on the tables. For a long time, those operators were not asking for open banking data up front. And the problem was always that as an open banking lender, you could give them the best rate on the table, but the customer expectation, especially at the primer end, was that you've got a pre-approved loan. And so you were always fighting against the modern expectation of instant access to credit, pre-approved access to credit, and being able to give a better rate. And that is finally changing. So there are some really great affiliates in the space, ClearScore, the largest one, who now are asking their customers for open banking data upfront in the journey. So that means for the first time, open banking powered lenders can essentially give the best of both worlds. We can say, yes, you expect pre-approved access to credit. That's just the way the modern customer has been raised. But we can also give you that better open banking powered rate. So I think that's a really important change, that where our customers are coming from, they are finally adopting open banking data, and that is meaning that the customer pool that we can reach and give a better offer to has really grown. That's really important. I think there's a really important kind of perception around how you use open banking data. Like, you can't help but look at some of the questions that kind of are popping up already, but one of them was asking the very sensible question, isn't it just going to increase our declines? We've got our bureau scorecard layer, we make a series of declines there, we see all this open banking data, extra set of declines. And the really important thing about using open banking data, if you want to use it in an intelligent way, is understanding if we see positive signals in the open banking data, where can we then pull back on the bureau data? Where can we be more lenient, whether it's your credit score, whether it's impairments in the file, whether it's a thin file. And it's that combination of using the positive signals from open banking to be more lenient with the traditional negative signals on the bureau data that allows you to grow the audience without basically doing this perception of a double decline. So that's the second thing, I think, that it's important to break that preconception that it's just limiting your audience. And then I think finally, the economy is in a much more volatile place than it used to be. Cost of living crisis means that a lot of people are sort of losing their jobs. You're finding it hard to keep up with payments. It's more important than it was before to see that up to the day data or someone, because a lot can change in the 30 or 60 days that it takes to get that information back to the Bureau. So I think sort of the economic picture that we're in right now makes a stronger case for open banking data than maybe a more stable time in the economy would have done. And even on a more specific level, there's been a huge rise in things like IVA mis-selling, which maybe you've seen these adverts where they're like, oh, come write off 70% of your debts. What could possibly go wrong? And of course they don't tell you all the negative impact it's going to have on your credit file. But there's a lot of customers who are basically doing a lot of credit stacking, taking out a lot of loans, going immediately onto an IVA, and again, that's the kind of thing that you need to be able to see on the open banking data, that incredibly recent set of history. So I would say there's a lot of modern risks that have been developing that make the use case for open banking data stronger than it used to be, and the infrastructure that supplies the majority of our customers has now adopted or is starting to adopt open banking data. So I think that's the if you're starting to see a tipping point now, open banking data's been around for a while. There have definitely been some people a few years ago who were like, oh, it's already dead. It hasn't had the power it was supposed to. I think that's one of the reasons why you're seeing it's that perception starting to change.
Can I add a couple of stats just to reinforce a couple of the points that Jamie was making there? I think are really important. I mean, the movement, hats off to ClearScore for pushing open banking at the quote stage, which is really important, and not only for customers with lower credit scores, but actually across all the different bands. So we receive 30% of the requests for quote that we get, and 20% of our dispersals are from are with open banking at top of funnel. So this is really powerful. So within the 5 to 10 seconds it takes to return a quote to the customer, we've sucked in the credit file, we've sucked in the open banking data, we've stitched it together, we've extracted features, we've run a bunch of policy rules and models, we've gone back with the targeted eligibility and price, and of course whether to quote or not. What difference does that make? I mean, there are sometimes customers with Delphis of 500, so that means Experian thinks that they have a 2/3 probability of default. And we're taking customers like that with an open banking type of funnel, and we're turning them into a 6-7% default rate.
Yeah.
So it's really powerful stuff. It also means that I think we've got a nice stat, which is something like for 48% of our requests for quote, we're either the only offer or the best offer by 10%. So this is the kind of difference it makes.
Yeah, very powerful. I mean, you mentioned, Jamie, already, that we've lent into one of the questions here already around accepts versus rejects. Does more data mean more rejects?
Yeah, it doesn't have to.
Tamsin's already highlighted the fact that you're accepting 2,000 extra customers a month that you wouldn't have done. You've got some compelling stats as well, Mark, around that.
We have a swap set, a nice swap set statistic, which is that for each one person with a nice credit score that you have to say no to because you see something you don't like in the open banking data, there's another 5 or 6 where the opposite is the case, that for a given risk appetite, you couldn't lend to them only with the credit file, but you can now. So it's really good for volumes, actually. This is not a volume-killing thing.
Yeah, and it's the criticality there is if you have open banking at the very back end and you're only using it for a last-minute affordability verification, what you're not going to get is the uplift that Mark's highlighted there, where you potentially would be kicking out good prospects based on the fact that they've got a thin credit file or they're marginal. If you use open banking at that stage, you keep them in the journey, and in a lot of cases, you're going to improve them because you're seeing the true cash flow of that individual. You're seeing that they've got salary, that they're paying rent, mortgage, that they're paying council tax, that they have no negative factors in their credit file, in their transaction data. So 3 months worth of transaction data is probably powerful enough for you to make a compelling, an accurate credit decision, whereas traditionally bureaus look at least 6 months worth of data before that power of bureau data really influences the decision. How are we doing for time, by the way? I know we started late.
Should we do some
1 minute,
questions?
okay. Well, Pinay, who has given up his right to anonymity and therefore deserves a shout out. Thank you, Pinay. How will bureaus differentiate themselves when all bureau information is eventually obtained from one source? Now, that's a very controversial question. I feel like I'm being targeted there as a bureau, but seeing as you guys work with bureaus, and Mark in particular, multi-bureau, do you have a view here as to this question?
One thing that is nice is to be able to do the extra services like retros. Retros are really important for us so that we learn from our decline experience as well as our accept experience. Being able to do that in a very flexible and agile way. So there's a lot of kind of on-demand type services. Also from an analytics perspective, being able to kind of get access to marketplace information, combine it with keys data or insights data, and sort of to democratize that that kind of information, I think is very helpful.
Do you guys have anything else you'd add to that?
I think just to add to that, it's I've worked with all three bureaus throughout my career, and it's largely about what you do with the data, how you support us, how you can help us interpret it, use it better, the products that lie around the data itself. So there's much more to it than just all having the same data. There's what you do with that and how you help us utilise it.
There's a challenger bureau. They're very small at the moment, but they are trying to look into basically cracking the problem of real time. Can we report these data sets in real time rather than what are these 30-day, 60-day reporting windows? I think the first one of the major bureaus to try and crack that problem and make that shift to real time would be a big game changer.
Yeah, I mean, from our perspective as well, I mean, bureaus are slightly differentiated by who reports to them. Some bureaus are stronger in high-cost short-term, some are stronger in buy now, pay later. Having a level playing field means that the bureaus are then on the hook to say, you've all got the same data. How can you turn that into better actionable intelligence? What can you tell me about this data that your competitors can't? So we enjoy that challenge and we look forward to it. So yeah, I know my analytics team are chomping at the bit to be able to take on the bureaus head-to-head with a level playing field at our competitors. So watch this space. I'm sorry we couldn't get to all the questions. I'm being told now, unfortunately, the time is up. But can I end by, please, everyone in the room giving a round of applause to our rock star panel.